Greetings, my name is Kevin Matthews and I am the tax professor. I want to welcome you back to class. Class is still in session because the learning never stops. And so eventually what we're going to talk about today is we're going to talk about the FBARs, the foreign bank and financial account reporting, and then also the basically a statement on specified financial foreign assets, commonly referred to as an 8938. Here at Beta Solutions, this is actually an area that we specialize in. We do a lot of work in the areas of international, and so I get a lot of calls from people saying, hey Kevin, I got this related international issue, what can we do about it, and how's that getting taken care of? Now the FBAR, I think the thing that confuses most taxpayers is that they don't realize that the FBAR and the 8938 have completely different purposes. All right? It has always been law that you are required to report foreign assets to the United States, through your tax returns. Okay, that has always been has been a law for many years. I mean, I don't even know when it started. That's what I would probably say about that. It's been so long. Okay, if you have a bank account in Switzerland that's earning interest, you always had an obligation to report that interest. Now, back in the good old days, back when I was a kid, I know they used to say having a Swiss bank account was kind of proof that you were rich because you could put your money over in Switzerland. They'll never tell the government, and then you never have to pay taxes on it. Those days are gone, okay? Because the Swiss banking system is starting to get compliant with a lot of that stuff because of things related to FATCA. Which, by the way, if you're interested in FATCA, we have a video that we've created on that, and feel free to go watch that if you want to get some more information about it. But the thing that you have to understand with this is that the FBAR, or as it used to be called the FBAR, now it's called the FinCEN114. And so FinCEN stands for the Financial Crime Investigation Network. And so, FinCEN is not really, FinCEN doesn't care about your taxable income. They really don't. FinCEN doesn't care about that. They're not coming after you for failing to report income. FinCEN really they're very much interested though in following money, and they follow money for a variety of reasons. I'm not going to get into all of that because, quite frankly, I think a lot of that has to do with national security, and I'm not going to broadcast to the entire world everything that it would have to do with. But the fact of the matter is, they need people who are United States connected or United States citizens or green card holders or other people who are tax residents of the United States to report their assets that are existing overseas. And they put a very low threshold on this, $10,000. Now I'm going to tell you, $10,000 is not a lot of money, especially when you're living in some of these other countries. For example, these European countries, I know people who have $10,000 bank accounts and it's just like a regular checking account to them. So you become required to report these things very quickly. And most people will go throughout their entire lives not realize that they had to report these things. And it's not $10,000 in one account. It's $10,000 in aggregate that's tied to you. Okay, and here's the other thing that can get really confusing about it. It's not just $10,000 in assets that you personally own. It also could be $10,000 in assets that you have a signatory on. So say, for example, you're working for a small company. They ask you to do all the accounting, so they ask you to go ahead and sign for the checkbook. You got access to $100,000 of their cash, or you can sign on their account that's got a bank account that's got $100,000 of access to cash. You now have a requirement to report under the FinCEN114 requirements. So it can get you can get into legal issues very quickly with this. Now the second form that we're going to talk about is the 8938. Now, as I talked about earlier in this video, you've always had a requirement to report these. But obviously, with the FinCEN reporting requirements down to $10,000, I think more and more people are reporting, and as a result of which, they're saying, hey, look, if I've got to report this FinCEN114, go ahead and report anything else that I have to report. And so the first form that they usually run into is the 8938, which is this, a statement on specified foreign financial assets. And basically what they're going to end up doing on this is that they're going to ask you to report in one of three groups. Okay, and so the first group is really any financial assets. That's going to be things like bank accounts, anywhere you have money that's stored. Okay, pension accounts, things of that nature. Now, and when I say pension accounts, I'm talking pension accounts that actually are just storing cash in a bank that's earning interest. Okay, so that's going to be the first group. The second group that you're going to have is where it's basically a deposit. Okay, so it's like a depository account of some kind. So maybe you put money in, and that deposit account then goes and invests in stocks, bonds, or mutual funds or anything of that nature. Then you would also have to report that on your 8938 in a specific section. And then the third section that we really talk about is where there's a custodial account that needs to be reported. Very common custodial accounts that exist are going to be life insurance policies, bonds that have to get done, and there's a specific area for those to get reported. And so those are kind of the areas that usually trip people up in order to be able to make that determination as to whether they have to report or not. Now something I do want to bring up before we go into the limits, if you have mutual funds, however, mutual funds actually don't, you can report them on the 8938. 99 times out of 100, however, you're going to be tripped up under what's called the PFIC rules. And we haven't gotten into PFICs yet in a video. I will probably do that in another video later on. But if you have mutual funds, folks, those are subject to the PFIC rules and require altogether different reporting altogether. And if you don't report on those, that's where they really get ugly with it. And I've seen penalties that can go as high as $100,000 for failure to report PFICs correctly. So now the requirements on our file Form 8938 are significantly higher than for the FinCEN requirements. FinCEN is basically if you or your spouse have $10,000 or more in aggregate foreign controlled assets, you have to report. Okay, so when it comes to the amounts to report for the 8938, if you are single as of the last day of the year and you have an exceeding value of $50,000 or more on the last day of the year, or $75,000 or more anytime during the year, you are then required to file the Form 8938. And if you're married filing joint, you can take those amounts and double them. So that takes you to $150,000 and $100,000 and $150,000 respectively. All right. If you are living outside the United States and you are qualified under what we would call the 911 exclusion, which is Code Section 911, which deals with foreign earned income exclusion. And if you do, it's kind of like, foreign earned income exclusion is kind of like love. If you qualify, you know it because you've probably been living overseas long enough to do it. And if you haven't, watch our video on that, and that'll talk to you about what that is and how that works. But if you are qualified for the FEIE, you then can actually increase your limits to $200,000 if you are single, and $400,000 if you are married filing joint. So if you are living overseas and you're qualified for the 911 exclusion, and if you haven't seen the 911 exclusion video, go ahead and see that at this time. It talks about a wide range of other topics, but in order to qualify for the higher limits in living in the foreign lands, you have to be qualified under 911 for the foreign earned income exclusion. And if you have assets at the end of the year of $200,000 or more, you have to report, or $400,000 or more if you're married filing joint. And if it's any time during the year that's $300,000 or more, that's not on the end of the year, you have to report. And if you're married filing joint, $600,000. It's a little confusing. But guys, we deal with this all the time, and so we actually help our clients to do this. Generally speaking, if our clients meet it, we just go ahead and file these, and it makes things real nice and easy and cleaned up, and so it gets people back up to compliance, and and it actually ends up working out better for you in the long run. Okay. Specified individual is a U.S. citizen, a U.S. resident alien for any part of the year, or a non-resident who makes an election to be treated as a U.S. resident alien. We are going to be doing a video on that later on, and so please feel free to find that video if you are interested about doing the election to be treated as a resident for the entire year. But this is one of the tax consequences that can happen as a result of it. You end up having to file the Form 8938, and so we want to make sure that gets done and filed correctly. Guys, this was sort of a tip of the iceberg. I know this video went really long, and I didn't intend it to, and I know that my voice is probably killing a lot of people out there, and I appreciate your guys' patience on this. My name is Kevin Matthews, and I am the tax professor. Remember, class is still in session because the learning never stops. If you have any questions for me, go ahead and put them in the comment box below. If you want to reach out to me personally, you can reach out to me on my website at www.betasolutioncpa.com. That's www.betasolutioncpa.com, and I'll be happy to reach out to you as soon as I can, and we can discuss any questions that you might have. Thank you for watching this video.